3 minutes to the opening bell on Wall Street, and things are looking pretty good this Monday morning. Dow up maybe 200 points. Keith Fitz with us this morning. Keith, why is the market rallying when you have all hell breaking loose in Israel?
I know, what a question, right? So there are two things. I've been up most of the night watching this pretty closely. One, there was rumor that there was going to be a temporary ceasefire, some sort of peace arrangement to allow humanitarian stuff in and out of the Gaza Strip. That doesn't look to be true, but it was enough to get the futures moving. At the same time, we're beginning to see the Fed, or think about having the Fed trot out lower interest rates or even a cut or a pause. Traders have to get ahead of that, whether they like what's happening in the Middle East or not, Stuart.
To me, the big problem is the price of oil. It looks like there's a possibility here of a widening war. A widening war would surely drive up the price of oil, and I think that would drive the market lower. What say you?
I agree with that, but here's the thing, right? If it's a measured increase in the price of oil, it may not drive the market lower because of all the leverage that the big traders use. They've hedged most of that risk out, Stuart, at this point. Where the average individual investor, on the other hand, has an opportunity, if that's true, particularly if they're invested in the big oil companies.
You still like Chevron, don't you?
I do. That's one of my personal holdings. I'm hoping to acquire more of that. I like the dividend. I like the fact that it's got a very debt-efficient balance sheet. I think it's one of the strongest majors, and yet Wall Street thinks it's totally ready to write off.
Could you just tell me off the top of your head, what's the dividend yield on Chevron?
I don't have that figure right off the top of my head, actually, Stuart. I haven't had my coffee yet this morning.
Okay. Well, you're on the West Coast. That's entirely understandable. Tesla reports later this week. I know. You want it to go down, don't you, so you can buy it?
Exactly. I love a sale. You know, what person in their right mind is going to go to a 50% more sale? You wouldn't. So if I think Tesla comes in with a little bit lower on the deliveries, that's what everybody's going to look at, but higher on the revenue, I think that's a good mix because they're not yet factoring in AI. They're not factoring in power production, power trading, insurance, finance, all the things that Elon Musk, I think, is going to be dropping some big hints about this term. So if I get the chance to buy it on the cheap, Stuart, I'm going.
It occurs to me that higher oil prices, if they move gas prices up, all very good news for Tesla, the electric car leader, right?
It is. And, you know, here's the other thing, right? The UAW strike, as long as that drags on, is absolutely the worst possible thing in the face of higher oil prices because it's going to squeeze the automakers at the worst possible moment.
Okay. Keith Fitz is buying Chevron. He likes it. Good dividend yield. And we'll find out what that is later. Keith, I'll get it. Believe me, I'll get it. Keith, thanks very much indeed. See you again later.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below. And of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.